Good morning, everyone. Welcome to Daily Rates Live with the Mortgage Calculator. In today's show, we're going to go over our live mortgage rates, and then we're going to do a deep dive into 2 to 4 unit property loans. Give us just a moment here to go live on all the different platforms. We do stream this on YouTube, Facebook, LinkedIn, Instagram, TikTok, pretty much everywhere. So give us just a moment here to go live on all the different platforms. We got the chat up on the screen there. Feel free to drop a comment there in the chat. Feel free to drop any questions you have in the chat as we go through our deep dive here today. But it looks like we're live on all the different platforms, so we will go ahead and get it started. Take the chat off the screen, but again, keep dropping comments there, drop any questions you have as well. So welcome everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. We are a lender that specializes in non-QM loans. And what we do every morning at 11 a.m. Eastern on the show is go through our live mortgage rates, and then we do a deep dive into a different loan topic. And today's topic is going to be 2 to 4 unit property, something that we're definitely familiar with here at the Mortgage Calculator, especially because we deal with a lot of non-QM loans, deal with a lot of investors. So this is something that we deal with very often. So Jose will go into a deep dive into that, but before we do, we'll pull up our rates. So Nick, if you're ready, let's go ahead and pull up today's pricing and see what it's looking
like. All right. So before I pull up the live rates, I want to explain the setup that we have here. So we're going to compare our APR today across the programs. It is May 22nd, and we'll set up a basic scenario that we'll use for all of the programs. That way we can compare apples to apples across all the different options. So we're going to set up a quote for a 500,000 purchase, 400,000 loan amount. That corresponds to 80% loan to value, 20% down payment. And we're going to set all the demos here to a 760 estimated FICO credit score. And all of the demos will have a 40% estimated debt to income ratio here for all the debt to income ratio loans. And for our DSCR option, we'll use a value of 1.5. So those are the values we'll use for the demo. If you'd like a full breakdown of all the itemized fees that go into the APR, a full loan estimate, please get with our team members. We have over 300 loan officers to help you out. So now that I've said that, let me go ahead and share my screen here. So first option up for most of our customers here is a 30-year fixed conventional primary option for a primary home. Today rates come in as low as 6.5, final APR 6.838. I think that's just a hair above yesterday. Still a great option. Remember, we were well over 7 for the last few months. Definitely some great movement here. Now, if for any reason our customer does not qualify for a conventional option, typically the next option we want to look at is an FHA option. FHA allows more leniency on credit issues as well as a much higher debt to income ratio. However, for this exact option, we've set everything the same so we can compare the APR across the programs. So for the same exact scenario, FHA comes in at 5.75 rate, final APR at 6.723. So notice if our customer qualifies for both, FHA could actually be a touch cheaper. And our customers that need to use FHA for the leniency we mentioned, definitely a great option. Now moving on to our VA options. Remember, VA is only for eligible veterans and active service members. If you are, VA is an amazing program. Rates today come in at 5.875, final APR 6.195. This is obviously the lowest APR of all the programs. So for our veterans that are eligible, definitely the best option is a VA program. And we'll scroll down here to the next row. For USDA, that's only for USDA eligible properties that are in a USDA area. Typically that corresponds to the rural areas. Just check the USDA map. But for our customers that are looking in those areas, USDA is a great option. Rates as low as 5.875. Final APR comes in at 6.617 with all the fees and everything. So typically we'll compare USDA to an FHA option, which is better than if you look at the APR, as well as a conventional option. So for those properties in a USDA area, typically the best option will be USDA if the customer qualifies. So those are our government and agency options. Most other banks or lenders, if our customer doesn't qualify for any of those, will have to deny the customer. But that's where we love to present our additional options here, where we have over 5,000 non-QM options. So typically if our customer doesn't qualify for conventional or any of the other government options, we want to check out our non-QM alt doc options. So this here is our 30-year fixed standard non-QM option. This would typically be a bank statement loan or similar. We have 1099, asset depletion, P&L, all kinds of different options. But the lowest rates here for the lowest option, probably a bank statement option. So today comes in at 6.999 rate, final APR 7.344. So notice we'll compare that to conventional. If our customer doesn't quite qualify for conventional, needs to use alternative documents, it's about a half a point difference there in the final APR. So definitely a great option. We love to solve those problems for our customers that need that extra help. And moving on to investment properties. So for the same options for non-QM alt doc, typically a bank statement option for an investment property. Rates as low as 7.5 today, final APR 7.793. So let's scroll down to our other investment options. So remember, government programs do not work for investments. So the only option we have here is the agency option. So no FHA, no VA, no USDA, just our conventional. So 30-year fixed conventional for an investment property. Comes in at 7.375 rate today, final APR 7.740. So notice that's a touch cheaper than our alt doc option. But always recommend our investors check out our favorite programs. Our DSCR options stands for debt service coverage ratio. No income, no employment required. We simply use the estimated rents to determine a DSCR value. As I mentioned before, for all the demos here, we use an estimated DSCR value of 1.5, meaning the estimated rents divided by the expenses is a ratio of 1.5, aka the property cash flow is very strong. So this will allow us to see all the best programs. First up is our 3-year prepayment penalty option. Rates come in at 7.249 today. Final APR 7.599. Notice that's beating conventional, which is absolutely amazing. And we even have some additional options that allow a 5-year prepay to get the rate even lower. So for investors that are willing to do a 5-year prepay, rates come in at 7% flat. Final APR 7.316. Absolutely blowing conventional out of the water, which is amazing. Typically, our investors will take DSCR options even when they're much higher than conventional, but with rates today, they're even lower, which is amazing. And our next couple options here are DSCR option with no prepayment penalty. So some investors don't want a prepayment penalty, no problem. Some states don't allow it also. Rates come in as low as 7.875%, final APR 8.231. So notice that's a little bit higher than our conventional option. So definitely recommend our investors interested in getting the best options add a prepayment penalty to sweeten the deal here. And moving on to our second mortgage, definitely a popular product, 30-year fixed second mortgage for a primary home. So this would be for our customers that want to get cash out but don't want to touch their low rate first mortgage, can get a second mortgage with a fixed rate second mortgage and even use alternative docs. Rates as low as 9.5, final APR 9.983. And this is typically a much lower rate than our HELOC option. So great option for our customers looking to do a fixed rate option. And for some reason, the fixed rate second didn't come up today again. Probably the rates are a little bit slow to issue this morning, but we do have another DSCR we can talk about since it's on the screen. Our 40-year DSCR option with a 3-year prepay. So for our investors looking to maximize their cash flow, we do have 40-year amortization options. Obviously, it's a little bit more expensive here. Rates as low as 7.625. Final APR 7.929. So when we compare that to the other 3-year option for the 30-year, notice this is a little bit different there, but a great option for our investors. And now let me switch my screen. And we'll get back into today's topic, which in our demos, obviously we always do a 1-unit property for all the demos here. We don't always get to check out the multi-units, which really gets a little bit tricky. The conventional option's pretty standard, but once we get into the non-QM world, I'm sure Jose has all kinds of tricks up his sleeve in order to maximize for our investors or house hackers. I'm sure you're going to explain here, Jose, that want to get those 2 to 4 unit properties for a primary, or of course 2 to 4 unit investment properties. So Jose, let's talk about these ways we can get into these multi-unit properties and then check out some live examples.
All right, this is a great episode today. Nick already introed here. I mean, we are talking about 2 to 4 unit properties, but specifically all the quotes I'm sharing with you today are going to be for a 4-unit, right? When we are searching for options, we can code it 2, 3, or 4 units. So I specifically coded all of these searches for a 4-unit property. Nick mentioned our house hackers. Those are our individuals always trying to get the best deal, whether it be the highest LTV possible within the confines of the law, right? Best terms possible. In this case, we're talking about high LTV 4-unit property loans for our house hackers, which we recommend this if this is going to be your first purchase, right? Very first property. You can buy it as a primary, right? Live in it for at least a year, live in one of the units for at least a year, and rent out the other 3 units. And then after a year, you can start searching for another property to see if you can find at that point your 1 unit that you move into and step up, right? Because it's all about stepping up. You're not going to be able to get a 4-unit or a single family property, for example, 1-unit property, and then get this 4-unit as an owner occupied property. Usually it's the other way around. You buy the 4-unit as the owner occupied property as your first property living, your first primary, and then down the road you can move on up to a 1-unit property, get that one as a primary, and at that point the 4-unit that was your primary now becomes your investment property, right? And hopefully by that time, maybe a year or 2 or 3 would have elapsed. Rates have dropped a little bit. And the whole idea here is to do a cash out refinance on your 4-unit. Hopefully get some money out for your new primary purchase, lower your interest rate as well. And if the value has increased enough, maybe even get rid of your mortgage insurance if you're refinancing into a conventional loan. Or if you're financing into a non-QM loan, then you're going to get rid of your mortgage insurance that way, because never any mortgage insurance applicable on any non-QM loan. So let me go ahead and share the examples I have for you today. And I start off with the house hacking examples, right? Our high LTV 4-unit property purchase loans. So the ultimate example for that would be the FHA loan that allows up to 96.5% LTV when it's a 4-unit property. And as you can see from the rates, never any loan level price adjustment for the FHA loan due to the number of units. So here we have 6.625 at par. Looks like we're getting some improvements here. And you can buy that down all the way to 5.875 at a cost of 2.375 points. Next option, VA, also an ultimate option here, but VA is a little bit more selective because you have to be either active military or veteran or the spouse of a deceased veteran to be able to take advantage of the VA loans. So that's why I put the FHA first, because FHA is just FHA. You don't even have to be a first-time buyer or anything like that for the FHA. So a VA, 100%. Our lowest cost option here, 7%, almost at par. And you can buy that down all the way to 6% for your 100% LTV financing for a VA purchase, 4 units. Next example here is our conventional purchase, 95% LTV. Now, you all know recently Fannie and Freddie added this option to their non-affordable loan option, right? So now you can purchase up to your 4-unit property primary like this, up to a 95% LTV. And they did that to try to alleviate the housing crunch out there, right? We know there's a lot of borrowers looking for primary homes. They just can't find it, obviously, preferably with the low down payment. So Fannie and Freddie opened up the 2 to 4 unit property with only 5% down. So 7.625 is at par, which is our lowest cost option. And you can buy that down to 6.625%. Now you do see the difference between these two, between FHA and this one. about a 1% difference in the rate. Now, our home possible, and you can also do this home ready. They're basically interchangeable except for a little bit of guideline issues. This is the Fannie Mae option, which is home possible. Actually, no, this is a Freddie Mac option. Excuse me. Freddie Mac is home possible. And I'm sorry, there's a typo there. It is 95% LTV on this option, 95% on the 4-unit option here. Now, 6.99 actually with a lender credit as our lowest cost option. And you can buy that down to 6.25% for our Fannie Mae home possible at 95% for the 4-unit. And now we're going to do a little non-QM action. Now, some of these options you may already be well aware of, but I always like to cover the whole spectrum. So in this case, we're going with a primary purchase on a 4-unit. This one happens to be full doc option, and you're looking at 9.75% being your lowest cost option, and you can buy this down to 8.75% at a cost of 2.5 points. So this was our non-QM full doc option. So now our investment, I'm mixing it around a little bit here. So now I'm here. This is for a bank statement investment purchase for a 4-unit property. This is using 12 months business bank statements. Could be 12 months personal bank statements as well. Same rate. So here we are looking at, we had a mix up in our rates. I'm so sorry. 10.624 is our lowest cost option on that one there, and you can buy that down, excuse me here, all the way to 9.624. 10.624 lowest cost option, 9.624 lowest rate option for your 10% down, 20% down bank statement. Now the cash out on the bank statement is also 80% LTV. Again, sorry about the mix up there on the table, but we're at 10.499 as our lowest cost option, and you can buy that down to 8.499. So a very deep rate sheet there. 10.499 lowest cost option, 8.499 lowest rate option. And now I always like to save the best for last, right? Our DSCR purchase of a 4-unit property with only 15% down with a 3-year prepay. Oh, my rates got messed up here again. 10.624 is our lowest cost option on this one, and it was 8.999 our lowest rate option. So 10.624 lowest cost option, 8.999 lowest rate option. The best key takeaway from this is a 15% down DSCR option. Very amazing option there. And now for our cash out option here, and 75%. Now notice we're bringing it down to a more normal loan to value. 75% is our normal LTV for cash out refis. So we are looking at more normal rates here. 8.875 is our lowest cost option, and we can buy that down all the way to 7.625. And if we were to have shown the example at 80% for the DSCR, we probably would have had rates similar to this for a 4-unit property at an 80%. But the example that I wanted to show you was the 85% LTV example, because until very recently, we did not have an option for a 4-unit property on a DSCR purchase with only 15% down, right? So that's really what I wanted to highlight on that example, is that now with 4 units, we can go up to 85% LTV for a DSCR. So definitely look to the mortgage calculator for your 4 unit property loans, whether you be the house hacker looking for that high LTV option for your first purchase, or whether you're an investor looking to maximize the loan to value on their purchase or their refi.
Okay, thank you, Jose. Okay, looks like we do have a question here. If there's any more questions, go ahead and drop them in the chat, but we do have a question here that we can pull up. Okay, the question is, you can use the income from the other 3 units to help qualify, correct, and in the DTI calculations.
Absolutely. That is one of the big benefits of the 4 unit property, whether you're buying it as a primary residence or whether you're buying it as an investment property. Primary residence, you can use 75%. If this is a purchase, you can use 75% of the income because they will apply a 25% expense factor, since we're talking about an unseasoned rental, right? You're buying it, never yet been reported on your tax return, so we give you 75% of the income. Now, one thing to note on the FHA property, right? There is a sustainability rule for FHA on these 4 unit properties, which means that should that owner occupied unit not be rented and you have 4 units rented, you have to calculate the debt service coverage ratio of the property, and it has to cover the rental income of all 4 units, have to cover the total housing expense, right? So this would be using all 4 units. So FHA does have that rule for these types of properties. So be aware, not only does your borrower have to qualify with their income, but the property has to qualify as a sustainable property that can sustain its own expenses.
So basically, they're checking if it turned into a pure investment property, it could still pay the mortgage, right?
Correct. It would have to be technically our 1.0 or above debt service coverage ratio.
Okay. I don't see any more questions, so I think we can wrap it up. Definitely great info there. Amazing options, especially the 85%. That's absolutely amazing. So thank you everybody for tuning in. Remember, we do this at 11 a.m. Eastern every weekday, where we go through the live rates and then do a deep dive into the own topic. So we got a new topic for you tomorrow. We'll see you tomorrow, 11 a.m. Eastern, for the next episode of Daily Rates Live with the Mortgage Calculator.